Given what went on in the world in March, at a national level, the housing market performed surprisingly strongly in the first quarter of 2026. Australia's housing market grew 0.7% every month in the first quarter and actually accelerated in March. The growth is consistent across both houses and units, and the annual rate of dwelling price growth nationally now sits at just under 12%, the highest level since August 2022. It's a bit of a tale of two groups of capitals, with Perth, Adelaide and Brisbane still booming, with the annual growth ranging from 11% to 25%, while Sydney and Melbourne have seen some easing in prices in recent months. Annual growth in our two largest markets was negative in March, but even within those two cities, the falls are limited to the top half of the market. More affordable suburbs still saw price rises, supported by the first home buyer support programs nationally. Supply is not only a problem in the new housing market. Total established house and unit listings over the last month are down nearly 11% compared to the same time last year, and down a whopping 15% over the 5-year average. This low level of supply will help support prices through the rest of 2026. It's not just the established market that has performed well. The HIA reported that sales of new home sales by builders rose nearly 10% in the quarter to be more than 30% higher than the same quarter a year ago. And building approvals also jumped strongly in February to be up nearly 15% on the same month last year, on the back of increases in approvals across both houses and units. But we can't escape the risk posed by much lower consumer sentiment on the back of the Middle East war and the related impacts on the local economy. The market is now expecting 1 or 2 more rate increases. One silver lining to the latest very poor consumer sentiment results was that the lower expectations of house price growth meant that the time to buy a dwelling index was the only subcomponent of the index that actually rose. Also, 40% of consumers are expecting 4 rate hikes in the next 12 months. So they'll be pleasantly surprised if the RBA only delivers 1 or 2 as economists currently forecast. But fundamentally, we are still a country in the midst of a housing shortage, a country that tends to become a more attractive place for more people to move as the world becomes more uncertain. Rental vacancy rates remain very low, population growth looks like it's on the rise again, and the economy is running at capacity, and the jobs market remains very strong. Any wobbles we see through the rest of 2026 are likely to simply delay a return to stronger markets and increased activity in 2027. If you'd like to understand how the market fits your investment strategy, talk to the team at Ollie Property.